Topic 1: Blockbuster SpaceX IPO, a record setting $75 billion offering that sparked a retail scramble, heavy options activity, reduced retail allocations, and warnings about overstretched valuations. SpaceX priced its IPO at $135 per share, creating the largest stock market debut on record. Summary: 3 lines. SpaceX priced its IPO at $135 and raised about $75 billion, creating the largest IPO in history and a roughly $1.777 trillion market cap. Strong demand and heavy derivative activity pushed implied pre-open prices higher, but retail allocations were cut into the low 20% range amid warnings about stretched valuation. Despite revenue growth, large persistent losses, surging capex largely for AI, and concentrated founder voting control leave material short and long-term risks. Details: SpaceX sold 555,560 shares at $135 per share, raising $75 billion and recording the largest IPO ever. The ticker is SPCX, and the market capitalization is about $1.777 trillion, ranking roughly 7th among U.S. companies. The IPO pricing used a fixed take-it-or-leave-it method, and pre-opening demand checks showed an overwhelming flow of institutional and retail orders, reportedly about 4 times oversubscribed in total. Retail investor allocation was set in the low 20% range, lower than initial expectations of around 30%, meaning many retail investors likely received few or no shares. Bloomberg reported retail orders exceeding $100 billion. Investor interest and derivatives trading, including futures based on crypto platform infrastructures, were very active. Some pre-market indicators pointed to implied prices above the IPO price, e.g., futures near 165. Financials: despite revenue growth, recent annual revenue roughly $18.67 billion, the company has sustained large losses, recent quarterly losses in the billions, cumulative deficit about $41.3 billion, and sharply rising capital expenditure, recent quarter $10.1 billion, most of which is AI-related. Most revenue comes from the Starlink satellite internet business, and xAI merged into the group in February, becoming core to the company's AI strategy. Large compute contracts with Anthropic and Google were disclosed just before the IPO, e.g., Anthropic about $1.25 billion per month, Google about $920 million per month. Numerous warnings about valuation have been issued. Firms like Morningstar called it overvalued and estimated intrinsic value at roughly half the IPO valuation, noting that traditional fundamentals such as PE are hard-pressed to justify the price. Elon Musk will retain about 82% of voting power after the listing, effectively maintaining control. The IPO could make him one of the first people valued in the multi-trillion dollar range by headline wealth metrics. Market commentators warned of short-term overheating, sharp rise then fall on the first day, e.g. Jim Cramer. Easing of index inclusion rules could allow early index inclusion, e.g. Nasdaq within 15 trading days, raising the prospect of automatic passive fund buying. Conclusion: the IPO is historic in scale and demand, but high valuation, ongoing losses, and concentrated founder control present clear risks. Investors should distinguish between short-term speculative flows and the longer-term recovery of fundamentals. Topic 2: geopolitical developments around a possible U.S. Iran deal are driving market sentiment and commodities. Oil prices moved on hopes of a settlement. Oil storage at Cushing, Oklahoma is running low. UK economy dipped 0.1% in April as geopolitical tensions around Iran weighed on growth. Summary: 3 lines. Hopes for a U.S. Iran preliminary framework eased risk aversion, pushing oil and commodity prices lower and equities higher, but Iran denied final approval, leaving uncertainty. U.S. strategic storage at Cushing, Oklahoma is near operational risk levels, and global commercial inventories are falling, raising supply-side vulnerability. The UK economy contracted 0.1% in April, with services weakness linked to energy cost and geopo.